Hello, and welcome to this informative video on the Vanguard FTSE Developed Markets ETF, ticker symbol VEA. VEA is an exchange-traded fund that tracks the performance of the FTSE Developed Markets Index. This index is made up of large and mid-sized companies from developed countries around the world, including the United States, Canada, Europe, Japan, and Australia. The index is weighted by market capitalization, meaning that the larger companies in the index have a greater impact on the overall performance of the fund. VEA has a low expense ratio of just 0.07%, making it a cost-effective choice for investors looking to gain broad exposure to developed markets. The fund is also managed passively, meaning that it simply tracks the performance of the underlying index, rather than actively trying to outperform it. This approach helps to keep costs low and allows investors to benefit from the natural diversification of the index. One of the key benefits of VEA is its broad diversification. The fund holds over 3,400 individual stocks, providing investors with exposure to a wide range of industries and sectors. This helps to reduce risk and increase the stability of the fund's performance over the long term. In terms of sector breakdown, the largest holdings of VEA are in the financials, technology, and healthcare industries. Some of the top holdings of the fund include companies such as Microsoft, Apple, and Amazon, as well as financial giants like JP Morgan Chase and Visa. This gives investors exposure to some of the most well-known and successful companies in the world. VEA has a history of strong performance, with an average annual return of around 9% over the past decade. While past performance is not indicative of future results, this track record suggests that VEA could be a good choice for investors looking to achieve long-term growth. One potential risk to consider with VEA is its exposure to developed markets. While these markets tend to be more stable and less volatile than emerging markets, they can still be affected by economic downturns or geopolitical events. For example, the recent COVID-19 pandemic had a negative impact on the performance of VEA and many other financial markets around the world. However, over the long term, developed markets have historically shown strong potential for growth, making VEA a potential choice for investors with a long-term time horizon. In terms of suitability, VEA could be a good choice for investors looking to achieve broad diversification across developed markets. It could be particularly useful for those who are looking to gain exposure to a wide range of industries and sectors, or for those who want to build a well-rounded portfolio with a mix of different asset classes. It's important to note that VEA is just one option for gaining exposure to developed markets, and there are many other options available to investors. It's always a good idea to do your own research and consult with a financial advisor before making any investment decisions. Thank you for watching this video on the Vanguard FTSE Developed Markets ETF, VEA. We hope you found this information helpful and that it gives you a better understanding of this popular investment option.